Hi, welcome back to our personality build-up series. And today I am going to explain you the intrinsic value concept. So, what is intrinsic value? The intrinsic value means the actual valuation of a company. If its if its value is actually lower than the current market price value, it's what is going on in the market right now. Then it is the greatest opportunity to invest your capital in that company. But still, I'm giving a disclaimer that it is not an investment idea or investment advice given by me because I'm not a SEBI registered advisor. Now, before we move to the actual concept, I want to give you the basic understanding of intrinsic value is. Basically, it means the actual valuation of the company and it can be calculated through its financial health, which includes earning assets, growth potential, and its dividend. As there are many models to calculate this intrinsic value, I can suggest you three models, and they are DCF means discounted cash flow, dividend discounted, and one is residual income model. But today I will show you how to calculate the intrinsic value from assets and the company's liabilities. So it is very important to calculate intrinsic value, as it at the time of the mergers and the acquisition it is also helpful to calculate the value. Also, there are many advantages of the intrinsic value calculation, as it gives the investment decisions and helps in risk management. But as every coin has the two sides, it is also having a negative side, and it is the complexity. So now we will try to understand its complexity, and let's get started. Now I will show you how intrinsic value is calculated from assets and liabilities. So let's take an example. If a company is having its total assets equals to 10 lakh rupees and liabilities also up to 7 lakh rupees. Okay, these assets also includes the intangible assets. Now what is intangible assets? Intangible asset means the reputation of the company, or in simple word it is the goodwill of a company, means goodwill. Now take the both assets and liabilities, means assets minus liabilities. Asset minus liability, the asset is 10 lakh and liabilities are 7 lakh. Total, the net will be the 3 lakhs, which is the net assets which are remaining. Now company is also having almost 10,000 shares actually currently traded at its market, means either on the NSE National Stock Exchange or at BSE Bombay Stock Exchange, wherever. 10,000 numbers stocks means shares. Now this net asset should be divided by shares. Let me show you. Net assets divided by total shares, which means 3 lakh divided by 10,000. It means almost 30 rupees of intrinsic value it has given. Now the actual results of 30 rupees which we are uh, at the final, means it is the intrinsic value, as simple as that. Now suppose, let's take an example of a company having its current market price at the rate almost 40 rupees. So now if the company is having its one share value 40 rupees, then as its intrinsic value if it's 30 rupees, then it's an symbol that it is an overvalued company, because its intrinsic value is 30 rupees and CMP means current market price is 40 rupees. It means higher the current market price and lower the intrinsic value, the condition is satisfying for overvaluation, overvalued. And if the if we reverse the condition, that if the intrinsic value is 30 only but the current market price is 20, that it means the best investment decision, that it is 10 rupees down and it is the future, um, as in the future it will give you the almost 10 rupees profit if you invest at this price. So it means it is undervalued. So now I'm going to show you a live example of a company called Suzlon, and currently it is traded at the 54 rupees value. But in this example, I have taken uh, goodwill as my own assumptions, because I can't predict the actual goodwill of this Suzlon company because it is very difficult to predict it. And in upcoming videos, I will also show you how the goodwill is predicted. So now we are assuming that the total asset is almost 85,000, or almost, sorry, 86,000, and liabilities are almost 13,000. The remaining value is, after deducting this value, is 72,954, 9, almost 73,000. Let's take it round off, 73,000. Now as we divide it, its number of shares, which are almost 1300 crores. These values are in crores. After dividing it, we will get almost 73,800 divided by 13, almost 56 rupees point 76 as its intrinsic value. So it is very closer CMP, means in this example you can see the intrinsic value is 56 and it is currently traded at 54. So it means it is undervalued, because it is having a potential to grow more up to 2.76 rupees, and it can give a best investment decision. So let's hope you had understand what this intrinsic value means. Now I hope you had understand the example of this um, actual intrinsic value, what it is. And I had taken a live example of this Suzlon company. I had predicted the goodwill of this company almost around 60,000, which is more than which I had taken an assumption, only assumption, that it will have its goodwill almost like 60,000. So yeah, and this is the concept. So now if you got some help or had understand the what concept is, so please comment me below, and do like, share and subscribe for more videos like this, and do follow the personality build up series which I had continuing with me. As you can see, I can talk fluently the English. Now let's end, let's make it.